Alright, hi there guys. I'm quickly going to talk through how bots work. So this is a very simple EMA crossover bot. I'm not an expert, I have to say, but I just want to explain to you how it actually works and why algorithmic trading is actually very important to actually understand. So firstly, you've got to understand about 60 to 7% of probably most asset classes are built up of trading bots. Bots come in all shapes and sizes. You can get extremely complex ones, you can get very simple ones. And the whole idea of bots is to get a annual return of basically between 20 and 50%. That's what you really want. So I'm just going to briefly go over this Ethereum USD pair. So obviously Ethereum is a crypto currency. It's a very new asset class, but it does still work. So this down here, the Pine editor, what actually is happening down here is very easy. Okay, so what we do is set a long condition for the bot to know when to go long, and short condition so the bot knows when to go short. Then we write two if statements telling it to go long and when to go short. Then we need to define an exit strategy, so it's just risk management. So for example down here, I'm risking 5% of my portfolio for a 1%. No, so I'm risking 1% of my portfolio for a 5% gain. Obviously don't do risking 5%, 4% because you will literally lose all your account. I think that's self-explanatory. But yeah, so now what we're going to do is go to strategy tester and we're going to have a look at the percentage profitability. Profitable. Okay, so this is a 33.33% return. I did an example earlier, basically stating if you had a 10k account and you held it over, let's say a 20-year period with 30% return, that 10k account would literally come out just under 2 million, which is ridiculous. So actually understanding how bots work and why they're very important is, I think, a necessity now, I believe personally. So just a general point about one, tip and trick, for example. The reason why there's loads of prices constantly going like that, what's actually happening is people are getting in and out of position, in and out of position, in and out of position. But obviously, sometimes bots will just go, well, the market price will just go a bit ridiculous. That's when bots are just, big bots theoretically, are going mental. For example, I've been on the USD Japan pair late at night, and what happens is the price of the market will change very, very rapidly with a small spread of about, let's say that's 6, and basically generating cash theoretically. So another point about bots is, like, for example, 200, 500 and 1,000 points. These are very important points because this is where bots get out. That's where you see like constant like bam, 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 bam. So like 500 points up, or go out, or 200 points up, get out. So it's very useful to know. So that's why some people close their position straight away at 200 or 500 or 1,000, because usually bots on the other side are getting out positions anyway. Because obviously the human behavior aspect of algorithmic, well, just of trading, we don't want to lose our profits. What's good about bots, it removes the human element, which is very important, and it's a bit proven. Basically, it is proven by just the profitability return, and you can change the time frame. For example, let's go to 2 hours, which is personally what I trade of. The percentage profitability 18%. So obviously it does change in relation to the time frame, but let's do a lower time frame, 19%. Okay, so let's see if I want to optimize this very quickly. Let's give my bot a little bit more room to breathe. 5% per trade, but we're going to go for a 1% return, a 10% return on our portfolio. So it's a 2-to-1 risk management technique. Okay, so now we've done that. We're going to save as bot copy. Yes, yes. Strategy tester, percent profitability, that has gone up. 2 hour. Oh, it's calculating. Okay, but yeah, you can optimize the bot by changing the parametrics, so it's very interesting to do. I would recommend people trying to learn this as well. I'm trying to learn it because I feel like it's got a lot of capability in the future, and I feel like more of the market players are using it now, and it's starting to trickle down to the lower players in the market, which so I believe is a very useful skill for everyone to learn. So, well, thank you for watching, and I hope you enjoyed this video. Okay, hello again. This part of the video I'm going to be explaining the return. It's on the daily time frame on numerous asset classes. So we've got the green, that's representing foreign exchange. We've got equities as yellow, crypto as blue, and obviously a commodity as red. So this is a percentage return. So a percentage of return is, so for example, if you had an account of, let's say, £100,000, basically what percentage of return is that if you let that account running for a year, that's how much the bot will generate in revenue. So 100, I'll go through an example down here, where I use 10,000 account balance, and over a 20-year period, that 10k, here's all the calculations if you really want to check, you come out with £1,900,496 and well 38p, which is quite good without doing anything, in my opinion. And there's obviously different returns, so this was just based on a 30% return, which is very good. You've got to take into account that hedge funds only have a return of about 13%, and that's like a really good year for them. But obviously if they are trading stupid amounts of capital, it's just ridiculous. You get some hedge funds are literally trading billions. It's ridiculous. But yeah, here we go. It's on the daily time frame. The bot will change due to the time frame. Because basically how the email works, it like goes back in time, and it goes on like the candlesticks. So obviously if you change the time frame, the candlesticks change, so therefore the calculations change. But yeah, here you go. For crypto, I'm going to be using an example on Bitcoin, for example, but even for Ethereum, using this bot, I got like a 60% return, which is ridiculous. And this was a very simple bot. This was not applying a major risk management. I'll talk about that in another video. But however, yeah, it's a bit ridiculous. A 10k account, put this bot on if it's getting a 30% return, which is really good. It could get better. Hold it for a 20-year period. Yeah, it's a no-brainer. However, I'm going to mention this a bit later. Algorithmic trading. Algorithmic trading is a big part of the financial markets now. Obviously, we've seen a lot of technology revolution, like the '01 boom and such what. It was a bit ridiculous. So, a big part of trading is understanding that algorithmic trading kind of owns it, unfortunately. So it's a no-brainer to get involved in it, in my opinion. I'm very new to it, and it's very intriguing, I have to say. But yeah, here we go. Hi there. Oh, hi there. It's George Atkinson here. Basically what I'm doing here is talking through how the bot actually works, and what it actually does, and how it looks at the market. So basically there's two indicators that are attached to the bot. The 200 EMA, which is the yellow, and the 50 EMA, which is the red. So currently, you see here, that will be suggesting a short signal. However, we see across here, and this is what the bot does. We saw across here, so red went above yellow, and that will suggest a long position. So the bot would have got into the position here. As you can see, we see a nice 100 pip move straight after it. So that's what the bot does, and what it will do is risk 4% of your portfolio, for example, for an 8% gain. You can change the parametrics, which I will show in the editor in a bit. And yeah, so for example, if it was the inverse, so let's see if we can find another one. Here, there we go, one hit. It's on the daily chart. It would come short here, and as you can see, however, price would have been here, so it would probably be like that, but still, that's quite a lot. 750 pips is reasonably good in my opinion. Yeah, so that's how the bot works really. Whenever there's a cross on that time frame, the bot will enter position going long or short within relation to the yellow and red lines. I think that's the most simplistic way to put it. Well, thank you, and I'll see you in a bit.